Client Agents. Thank you so much for showing up in droves today. We've got Christopher Williams on the phone today, and he is going to be talking to us about a new loan program. And we met Christopher at, can I call you Chris? I see your name's on here as Chris. Is that cool? All right. So we met Chris at Weathered Souls, at our mixer that we had out of Weathered Souls. If you're not coming to these mixers, guys, you need to. It's totally worth a Wednesday afternoon to go sit down there, drink some beers, and meet some new people. And I cannot believe how many interesting, different people, different sectors, different stuff that came in, Chris being one of them. So Chris told us immediately, actually, Chris Negron told us about Chris, and we got to talking. And he's got an amazing loan program, guys. And from my understanding, it's going to be something that's going to be extremely helpful, not only for people looking for houses right now. And if you remember my video, I said this, and I very adamantly mean it. And I know if you're trying to sell houses right now, you're seeing this struggle with inflation being up. People have less money. It costs more money to buy eggs. I still make the same amount of money. Where's that money coming from? Well, it tends to eat into people's savings. It tends to hurt people that way. So not a lot of people have savings. Plus, I was going to shoot a video the other day, and I was doing research on the statistics right now. The number of houses that have sold in Sabor dropped like 11% or something like that. I can't remember the exact number. But house prices jumped up by 14%. So we're selling less houses that are more expensive. So we have more expensive houses. We have higher interest rates. We have less money in savings. And then all of a sudden, Chris Williams comes over here and goes, hey, I got a no money down loan, which would be perfect for, I'm going to guess, about 90% of San Antonians. Now, the problem with that is it's local, it's geographically mandated. And I'm going to let Chris talk about it. So Chris, let's jump into this. Let me introduce yourself. Tell me who you are, what you do.
Good morning. My name is Christopher Williams. I'm actually with Regions Mortgage. I've been in the industry about 8 years. Started off with Wells Fargo, and then moved to Regions Mortgage. And of course, I've seen a difference because of all the different loan programs that they offer. So it was a big deal for me in order to move to a different mortgaging company that allowed different and more programs. But also, to me, it's the real deal. I mean, having to deal with realtors like yourselves and actually build relationships. To me, that's where the real mortgaging goes on, is out in the field. So I appreciate Chris as well as Colin for allowing me to talk about the program that we do have, or that we do have, some of the programs. But I do have a PowerPoint. I don't know if you want me to share that.
No, I do. But before we do, let me cut you off real quick, because Chris had mentioned that he really likes Regions and what they're doing. Chris, just for the people that are very, very new, give me like a 2-minute blurb. What is an RMLO? What do y'all do? How does it work? How do you broker things? Like, kind of give us the structure of your business and why you like working for Regions,
Okay.
as opposed to other ones. Like, what makes that special, and why should they call you? Not just the zero down, but why else?
Right. So Regions actually, they do a lot of inside portfolio loans, such as doctor loans. We have the ones that I'm going to be speaking of. We have, of course, relationship banking. And then, of course, we have all the cookie cutter loans. But what attracted me was the portfolio loans that Regions offers, that no other lender or even broker is going to be able to offer these things. So it's one of those things to where when I was putting this stuff together and trying to get in front of people, it was an eye catcher. Okay. And so that's why I feel like Regions kind of won me over, was because the things that they're willing to do in order to make a difference in the market, as well as be known in the market. So
real quick, you kept dropping the words portfolio loan. You mind explaining what a portfolio loan is versus more like the cookie cutter, like an FHA or VA? Like, explain the difference in those two for me.
So portfolio loans are basically loans that are written up through the actual bank. So what happens here is, of course, you got your cookie cutter loans, FHA, USDA. You have, of course, your conventional. Regions Bank actually draws up their own loans, and they also service their own loans as well. So if you go through a brokerage, most of the time what's going to happen is they're going to sell that loan off to an actual servicer, whether that be Wells Fargo, Mr. Cooper Loans, people who service those loans. But Regions actually draws up their own loans, and it's backed by the actual bank. And that's one of the things that, this loan offers as well. with no mortgage insurance. And that's a really, really big deal, especially in today's market, because of the fact that, as Colin said previously, everything's more expensive these days. You know, rates are going back and forth. And if you get a loan that has no mortgage insurance that can help a customer out, that can definitely assist their debt to income, okay, and qualifying for that specific loan. So they're good deals, and portfolio loan basically is what the actual bank considers their own programs to offer to the market today.
Yeah, so just real quick, cursory guys, whenever you do a loan like an FHA loan, that's backed by the federal government. The government will bail them out if you default on it or whatever it is, right? And because of that, FHA has certain standards, like you have to have this debt to income, you have to have this credit score, you have to have, right, all these little things in a row. When a portfolio loan comes together, it's the bank, Regions Bank, Seguin State Bank and Trust, and they make the rules, whatever rules they want to make, as long as it's compliant with other banking regulations. But for the most part, they get to make the rules. And so this new one's pretty cool. So yeah, if you got that PowerPoint, let me
So we actually have a loan program basically geared for low to moderate income areas. Okay, so if you take a look at the map of San Antonio, you're going to realize that a lot of San Antonio is low to moderate income areas, and not just in San Antonio. This can be outside of San Antonio. And there's a map that I can actually send you guys. That way, if you guys come into a property, you can actually type that address in, and it'll let you know exactly if it's a low to moderate income area or a home. And what we offer for those specific homes is 100% financing, as well as no mortgage insurance, and then no income requirements. So this is a great program that you can get customers in, basically like a first-time home buyer thing. It's going to be for primary homes, of course. But what when I talk to Chris, I've heard that some of you guys are investors as well, that are actually investing in other properties, remodeling them, and they look great. I seen one of Chris's. I was like, wow. And looking in the area, that home actually qualifies for this specific program. Now, of course, there are credit score. We do have credit score minimums. For that one, it's going to be a 680, which is really great. We're not asking for a 700. We're not asking for a 750 or even an 800. We're looking at a 680 credit score, and that will get them qualified for that specific program with no money down. We also do have 6% realtor commission or seller concessions that you can offer on that home to eliminate any closing cost. So these are it's a really good program that we have. Give me 1 second here.
Do you see my message, Chris? You can share now. I got it figured out.
Okay, so this is pretty much the breakdown of our Affordable 100. You can borrow up to 100% of the loan to value. Of course, there's no mortgage insurance required. It is a primary purchase only. Maximum 6% seller contribution. This does work on single family homes as well as warrantable condos. Of course, we went over the minimum credit score, which is going to be 680. And of course, since we're a bank, you also can get in with a preferred checking account as well. But I mean, this is a great program in regards to, if somebody comes to you and says that they don't have the money down, but they have a pretty decent credit score, we can definitely assist them and get them in that home for you. The other one we have is going to be the Affordable 97. This one here is going to be 97%, which is 3% needs to be put down, but the 3% can be put down from a gift, a grant, or a nonprofit organization. Okay, and this does remain the same as no mortgage insurance. Okay, and then we do the 6% seller contribution. Now, the credit score for this one is going to be a 620. Okay, but again, these are things that Regions holds on to. Again, portfolio loans, and it's something that they're very proud of because it's been doing really, really well, especially in this market when everything's going up. And it does assist buyers in regards to their debt to income as well. Whenever you're not having to pay $150 or $160 a month just on mortgage insurance.
Hey, quick question, Chris. It says that there's a maximum 6% seller contribution.
Yes.
Can the 3% down come from a seller's contribution? Could we rebate that for the down payment or no?
Yes. Yeah. For a gift or a grant, I mean, that'd be considered basically a gift. So it's something that we can definitely do. Again, it's these programs, and these are the ones that caught Chris's eye, you know, and Colin was kind of, you know, kind of thrown a little bit, was like, well, that's crazy, you know, but it's something that we do offer. Of course, we do offer other loans as well, FHA, USDA, all the other cookie cutter loans, but we also do physician loans. We do emerging professional loans, foreign national loans. We do one-time closing construction loans. We also have a 360-day rate lock. Let's say that you have a customer that's, you know, getting their home built, but then they have to find an end loan to that. Well, I actually just closed on one of those, and I'm actually closing it on Monday. Basically, they found somebody who could do the interim loan to get it built. He needed to find an end loan. We actually started this process when he was 2 months into the actual construction period. And so we're closing on it on Monday. And of course, we also do renovation loans.
Are the renovation, are those the 203Ks?
No, these are not the 203Ks. The renovation loan is another portfolio loan that we have. And they can do up to 90% of the loan to value, but we also take the future value of the home as opposed to as to what it is currently, and saying, hey, you have to put this down. The renovation loan actually looks to the future value of the home.
So let me back up. Sorry, I have so many questions about all those things you just said. Yeah. I'm trying to stay on point. With this affordable 100, affordable 97, what's the catch? I mean, one of the catches is obviously credit score, right? 680 versus 620. Right. Both are doable. So that's interesting to me. If you got good credit but no money, that, you know, that does handle some people. But what are the rest of the catches? Because I'm trying to figure out how these guys are protecting themselves.
So since this, Dan, I'm going to be honest with you, since this has been actually doing really well in our market, what they're doing now, and they're going to start adding, I believe this is going to be in May, they're going to start adding lender paid insurance, but they're not going to even look at purchasing that until after the loan is closed. So it's not going to affect the customer in any way. So basically what they're going to do is take the brunt of that. That way they have some type of insurance in case the customer defaults.
Gotcha. And what kind of rates are these two looking at right now? The 197.
These are going to be conventional rates. So it's based off of a conventional loan. And you're going to be looking at conventional rates. Currently, I'll be honest with you, conventional rates are higher than FHA rates. Okay. But then again, you're still paying mortgage insurance, right? So there's a catch with that.
6 in one hand, half dozen in the other.
Right.
Yeah. Gotcha. So the conventional rates right now are what, 7, 8, 9, somewhere in there?
Oh, I think I'm running one today, which is around 6.7, I believe, 6.7.
Gotcha.
6.
Okay, yeah, that's not bad at all. So closer on the 7 range. And then the next question, I mean, this is just it's too good. Like this, I love this program. I think it's great. I'm trying to figure out where the catch for this thing would be because I can't understand why a lot of people wouldn't do that. It seems like a great program.
Yeah, I mean, it
throughout
is.
the
I mean, and again, it goes by conventional guidelines. So you don't want to have somebody who has, I've ran into people who have a 680 credit score, but they're in default, on their credit somewhere, or they have something that needs to be paid off. So again, it does go by the conventional guidelines. Now, FHA guidelines, of course, they're going to be a little bit softer to where, they kind of overlook anything that may be in default on a customer's credit.
So can you pull up, since you're the host now, can you pull up a map, the map that you were showing me the other day where you can actually identify where these properties, the eligible properties are?
Yes. So
Because here's what I'm thinking, guys. Just personally, I'm sorry, Chris, while you're pulling that up, I want to get these 2 flyers and I'm going to add them to the documents on my listings if they fall into these. So if I flip a house in one of these areas, I'm going to say this home qualifies for a 0% down loan, and you just tag that in there, right? I would just put this under the documents under something special, right? Please contact Christopher for more information. And is this program strictly through Regions? It's not you're not brokering this deal anywhere else from somebody. It's strictly Regions.
Strictly Regions. Yep.
So that means, guys, is you're not going to find it anywhere but from Chris. It's a portfolio loan within his company that they're doing. So it's.
And I have
Okay.
a quick question.
Okay.
Really quick. So I know you had mentioned this as if it was your personal home, but then you also had mentioned Chris wanting to utilize it as well. So there isn't an option to do this as an investor for your own personal home? Like mine are under the LLC. I wouldn't have the option since it goes off the conventional rates
Correct.
and everything to do that?
Yes, that's correct.
Okay. Well, then that nixes out everything I was going to ask for the cash out refi. Never mind. Thank you.
Well, what I think Chris is utilizing it for is as a marketing tool to sell a house that he's flipped on the
Got you.
backside of it to the consumer. Like, hey, consumer, you can get into this house for 0 down.
Got you. Yeah, I don't like to sell a lot of mine. So I was thinking more F2, I needed to refinance. And I was thinking if I was able to utilize this to refinance it and not have to put anything down, so I don't have to bring anything and take it out of private money or hard money, but that is okay.
Yeah, but hold on, Riley, because he did say some stuff about that, but I want to finish this affordable one because we're going to circle back around to that because I'm having the same problem, but we'll circle back.
Good deal.
Sorry, Chris, you got that map?
Yes. So can you guys see this?
No, we're still seeing the affordable 97.
Yeah, we still see the.
Okay.
So as you can see by the map, everything is no.
Right. So this is a map that I can actually send you guys. You're going to want to go to 2022 because they haven't came out with the 2023 maps yet in regards to the geocoding. But this actually, if you type in an address, we'll just do one of Chris's homes, the 330. I think it was Hollenbeck here.
Yeah, there you go.
Okay. You type that in. Okay, and then you're going to click here, the census demographic data. And then up here, it's going to say tracked income level. If this thing says low to moderate, what that means is that house automatically qualifies for this program. And this is a good tool to have just in general. Because, there are other lenders out there that, give incentives in regards to that stuff as well, but they're still not as good as us, but, we'll talk about that some other time. But this is just a good tool to have in general. This shows right here that it's moderate, and it shows that his actual property does qualify for this program, the Affordable 100, as well as the Affordable 97.
Chris, is there a way to see what San Antonio looks like and I guess the approved areas?
So let me see here. We just type in San Antonio.
What office is that's Bandera? What government entity is putting this out? What is FFIEC?
So this is a government program. Basically, it's just like a government consensus website. And what it does is it basically rates areas in regards to their income levels. And so it's a free website. Of course, we as Regions, we have our own website, but this was something that was presented to us before we actually came out with our own website. That's internal.
I just found it. It's the Federal Financial Institutions Examination Council. That's a mouthful. But yeah, is there a way to look at the general map of San Antonio, or do you have a general idea that you can maybe kind of point out to us?
I sure can. Give me 1 second. I'm going to pull up the system really quick here.
I mean, this is. I got so many more questions. I want to go down the other road.
Hey, so Colin,
this is a cool loan program.
If I can chime in, so the reason Chris reached out to me was one of my listings. I have an investor who's flipping 3 Southside homes right now, so all of them fit this map. And so he reached out to me about a couple of weeks after saying, hey, look, you know, your home qualifies for 0 down, 680 credit score, no PMI, and is great. And so I've been putting a lot of stuff in Chris's hands, and he's great at follow-up. Over the last few weeks, a month or more, I've given him maybe a dozen potential leads just from my sign. Now, some of them don't meet it because they don't have the credit score. They haven't been at their job long enough. So some of them haven't gone nowhere, but he is trying, and he's consistently updating me. And I've used the map because of the email that Chris has sent out to me. This even follows, there's some new build construction that follows into this, that you can buy a brand new home, but because of the demographics, like Perry Home is building right by Palo Alto, the college.
Yeah, down on the south side.
Yeah, and this qualifies because of the demographic before is a moderate to low income. Those new homes still fall under the map. Now, I don't have a client to get through the process to it, but the map does show that it qualifies.
Dude, that's slick. Wait, Chris, Williams, are you about to tell me that all the pink areas?
That is correct.
Oh, dear God. That's 80% of San Antonio.
Yep. That's why I said it's very big. And that's why I said at the beginning, San Antonio is like 80 to 85%, LMI areas to where this actual program qualifies. So this is everything in the pink is under the track levels.
Dude, that's nuts. All right, so real quick, guys, just to make sure, credit score of 680, you can get 100% of your payment, no PMI. Private mortgage insurance, guys. That for those of y'all that are brand new, what's PMI or MIP? They switch the letters around depending on the loan program, but it's private mortgage insurance. And basically, if you don't put 20% down on your house, they make you pay an additional insurance on top of it. Okay, so this one does not require that insurance. That insurance, in my experience, I don't know, $200-300 a month. I mean, it's not cheap. And it does go against your debt to income ratio. So it's basically like having an additional car payment on your record, which really limits the amount of house you can buy. So that's nice that it doesn't have it in there. It looks like pretty much everything inside 410 except Alamo Heights, right? And then south of that is good too, in the downtown. So that's great. So 680 credit score, you get 100%, 620, you can get 97%. Conventional loan, and guys, there's so many houses. If you've got anybody looking for a house anywhere in that area, you should have them talk to Chris. That's a big thing. And if you have a flip anywhere in this area, you need to put in here that house qualifies for 0% down. That's a huge selling point. We got to be careful how you do that because you're not a RMLO. This house qualifies for what I would put in there is I'd say this house qualifies for a 0% down home loan through Regions Mortgage. Please ask your realtor for details. And then I'd put in the special provisions like, hey, contact this guy or whatever. And I
Hey,
might even throw
Chris.
those flyers in.
Quick question, would this qualify for just San Antonio, or would it be available like in Houston, Texas?
Chris, you're muted.
I'm sorry. So yes, it does qualify for Houston as well. Let me pull up the Houston map really quick. Here comes the pink areas. Give me 1 second. It's just taking a minute to load up. Those are going to be the areas in Houston that this actually does qualify for.
What? I saw one in Seguin. Hey, can you go back to Seguin for me real quick?
Yeah.
Thank you. Wow.
Uh-huh.
Susanna, hold on. I really want to look at something. Susie, check this out. I think Osvaldo's house, Osvaldo, excuse me. Can you zoom in a little bit for me?
Yeah.
Oh, no, it's east of 46. Never mind. You can zoom out.
Okay.
Dang it.
That would have been great, actually.
I would have moved into Osvaldo's house.
But yeah, guys,
Dang,
I
that
mean,
was cool.
if you guys have any questions, definitely give me a call. Looks like Chris put my information in the actual chat. I do
Hey
work.
guys, I'll send this out to all y'all too. Chris, if you'll email me those flyers and all that, we'll get it all pushed out for you.
Okay, that sounds good. Does anybody else have any other questions?
Because if not, I got a bunch, but I want to stay on this one first. So if anybody's got any questions about this 197, Josie, you're off mute. What do you got? Nothing. Everybody understands it clear as mud. I love it. So Chris, in the last 10, 15 minutes here.
I have a question real quick. On regards to the property itself, I mean, I know we're talking like properties that have been fixed up. I mean, are there any particular requirements that the property has to have, or as far as being able to utilize this program?
So of course, it just has to be livable, you know. Usually, now they won't invest it, and it's going to get a regular appraisal, you know. But again, it's going to be more conventional guidelines. It's not going to be like FHA to where they say, okay, well, there's paint that needs to be done. There's those types of checklists that need to be done for FHA. It is going to go strictly by like conventional guidelines. So, and actually conventional, it does give you more leeway than an FHA would in regards to anything that's going on with the home inside.
But the house has to be livable and it has to be for your home. Correct?
Hey, somebody's not on mute that needs to be. Josie,
Yes.
Josie, mute. Or are you talking to him?
Hey, so Chris, so it only qualifies for homesteads that are move-in ready homes, correct?
Yes, that is correct.
Gotcha. So it's got to be in pretty good shape, guys. Just to kind of tag on to what Chris was saying is like, yeah, FHA and VA, they're a little bit more stickler about things. Conventional guidelines tend to be a little bit looser. All of that's going to be picked up by the appraiser. So when the appraiser goes in there, there's going to be those lender required repairs. So it's not whether, again, for the new people, it's not what you don't fail or pass an inspection, you fail or pass an appraisal.
Right.
So that's where that stuff's going to come up. If you have any questions about that, you're going to have to talk to an appraiser because that's a whole list of stuff that I certainly don't know, Chris. I doubt you do. That's why they go to class for all that. Is to learn all that stuff. It's a lot. It's a lot of guidelines. 3-inch stairs and railings and this and that. Blah blah blah. I've gotten busted on a bunch of them. That's the only reason why I know a handful. So real quick, all right. So zigging instead of zagging in the last couple minutes, Chris, tell me in bullet points about your foreign persons one. You said you had one for non-citizens. What's going on with that?
Okay, so yes, they do have one for non-citizens. Let me pull that up really quick here. Give me a second.
That's a big thing here in San Antonio, guys. I know a lot of y'all, I mean, and obviously it's going to more than likely be Mexican nationals, but there's a lot of them that like to come up here and buy property. I know a lot of Mexican nationals that have bought up in like the Stone Oak area and over on I-10 over in the, whatever that is, over by Fiesta, Texas. Can't think of the name. But yeah, these guys come out and they spend a lot of money and buy some houses and might as well get a piece of it. So let's figure out how to get them a loan. Does anybody on here work with Mexican nationals? I'm real curious as if you do, if how you market to that.
I work with some of them, but most of my clients are normally just cash buyers.
Yeah.
Yeah.
The kingpins.
If got money.
Hey, that's between you and God how you got it. I'll help you spend it.
That's what I say.
It's between you and the good Lord. How do you market to them, Israel? While we're waiting,
Mine are
for
just
Chris?
word of mouth. I mean,
Yeah.
once you are able to work with one or two, they normally have, they're very well with close to their own circle or influence within themselves. So
Yeah.
most of them are compadres.
And I feel like a lot of them come from Monterrey, right? Am I crazy on that?
I get them from Monterrey, Torreon, Mexico City. Those are my three
Like-
main ones.
I feel like every Mexican national I've ever met is from Monterrey. And I'm like, it's just, that's where we come. It's like right now from the Californians, like all the Californians are coming here. It's like, and then all the Monterrey people. I don't know. It's weird. Chris, did you find it?
Yes, give me one sharing right now. All right. So we have a product called the Region Smart Solutions. And basically, this kind of goes against the grain, but what it usually does is for things like we do things such as condo hotels for, like, let's say a son's moving off to college. The parents want to buy the son a home. And that's what Smart Solutions does. This is kind of a go against the grain type thing. And one of those things is the four nationals. Okay. So the Region Smart Solutions, they offer the 10, 15, 20, 30, 25 and 30-year loans. They also offer ARMs. Now, the four nationals, it has to be 25% down. Okay. Their DTI can be at 30%. It shows here no credit score is required. If the borrower has a credit score, it must be equal or greater. Or,
Yeah.
yeah.
Equal or greater than 7. Yeah.
An international credit report is required for each borrower, must be ordered through the Region Smart Solutions. No delinquent credit regardless of age or amount. Eligible properties, second home properties only. Owner occupied properties allowed for non-permanent resident aliens and permanent resident aliens with appropriate documentation. So these are
Gotcha.
things
So
we do offer.
gotcha. So it's 25% down. It's a second home loan. I mean, if I were to go buy a beach house, those are basically the terms I'm going to have to hit up anyway.
Yeah. I know somebody recently said that they pay cash for their stuff. I mean, this will give them an option if they just want to put 25% down.
Gotcha. And then talk to me. You said you had the fix and flip or the repair loans. Talk to me about that one.
So you're talking about the renovation loans.
Yes, sir.
So let's see here. Renovation loans.
and
I do. Go ahead.
Are the
I'm sorry.
renovation loans first and foremost, because we got a lot of investors here, so I'm probably going to poo-poo on them right now. On the renovation loans, are they owner-occupied loans?
I believe so. That's what I was going to say. Give me one
That's
second.
going to be my
here.
guess on that one, yeah.
Yeah.
So why he's looking for that, guys? Earlier I said a 203K, and for those of you that are unfamiliar, the when you get an FHA loan and you're filling out the third party financing addendum, everybody always writes 203B. That is the typical FHA. I'm just going to buy a house and move into it. Okay. Everybody always wants to know what those numbers mean. It's lines in the tax code. So line number 203 of FHA document, whatever, section B. That's what all that means. But so there's also a 203K, which is a FHA loan that allows you to buy a house that needs renovation. It's got to be owner occupied. And so everybody, I've never done one, to be honest with you, but everybody I've ever met that's done one says you've got to be on top of it, because you got to have the administrative persistence to fight with the government every single time. You got to get so many contractor bids. You got to get people to come and inspect it. You got to, I mean, there's a lot of process to get that done properly. So I'm curious if this one is going to be easier. So first thing is, it does look like it has to be owner occupied. Which is nice. Oh, Chris, while you're looking, do you do HELOCs? I've had a lot of people asking me about HELOCs lately.
Yes, we do do HELOCs. That is a different department, but I do have a contact for that we do HELOCs. Also, we do have a 50F loan that if somebody says we'll already have a second lien on the property, we can actually redo the loan to where they can actually go back out and get another HELOC.
Do y'all,
So
you
just
have-
kind of a consolidation.
ooh, I'm
Yeah.
sorry.
No,
you
go
also-
ahead, Riley.
The option of a HELOC on investments, or is that only on primary residence?
So I believe it's just primary residence.
Okay.
But I can check, I don't know the actual guidelines for our HELOC department, but I can find out.
Yeah,
But
send
also
it-
have, go ahead.
Send me that department's number, Chris, and I'll forward it on to Riley, because it sounds like Riley and I are in a very similar boat right now.
Yeah, I already have one through my primary. So looking, I know there's a way. I just don't know how and where and who to get it on the other. So we'll figure it out together.
Yeah, it's I'm with you. Like I've got all these properties I got to get some money out of, and I'm trying to refinance them with everything being so high and backwards, and everybody's scared. It's been incredibly difficult. Without a
I'm
doubt,
just
the hardest
for the
loans
eligibility.
I've ever had to try and get. You like these curveballs? Am I making it hard?
Okay, so our renovation loan is for primary and second home units.
So for the fix and flip,
Yes,
so you can do a second home, but so when you say second home, though, I'm assuming it can't be an entity. It's got to be a real person. Is that correct?
correct, yes.
Yeah. So if I want to buy a beach house, Colin, it's going to have to be under my name, not an LLC or something like that. So I can't really do a flip with it. It's not really a hard money-esque loan.
Right, right.
What
But I do
are
have
the
some connections in the hard money thing too as well. So,
what are the terms on that one? Do you have that one page?
yeah. The terms. So we have 30, 25, 20, 15. And then it shows here, loan to value can go up to 90% at a 720 credit score, 80% with a 700. Second home, 80% with a 700.
Okay. 25% down. Have good credit. Have some fun with it. Okay. And then the last one for Riley and myself and anybody else that cares. What do you have for like LLC loans or refi out through LLCs?
So the
Do you
refi
carry anything that'll handle that?
LLCs. We do. I think that's the conversation we had previously, right? In regards to
I
the
think we did.
LLC, just the refinance. Yeah, we don't have, we can do the refinance, but we don't do cash outs on the specific LLC properties. So we do have a program to refinance it, but we don't have a program to do like a cash out for an LLC property.
Gotcha.
Not yet.
Not yet, right? Y'all do have a lot of programs, man. It's pretty pretty epic. So, ladies and gentlemen, that's all I've got. That was some fantastic information. I'm really legitimately excited about offering this program to some people. Like I'm going to take snippets of this out and I'm going to use it for marketing. I honestly think you guys should too. Like this is big because in my experience, the biggest concern that people have is I don't have enough money to buy a house. Right there. That's the first one. They always think they have to have 20, 25, 30% down to buy a house. They think they can need $100,000, which, that's always the first objection I have to come. The second one is they're always scared to death for an RMLO like Chris here to dig through their dirty laundry. They don't, it's like, oh, I owe some back lunch money from third grade. I don't want to, they're a little ashamed. And that one's just a pride issue. It's a little bit harder to get over. But if you can show them, it's like, guys, if you don't need any money down to buy a house, you really don't. And again, those opportunity areas, that was a lot of San Antonio. It was pretty much everything inside Loop 410, except for downtown and Alamo Heights. So that's a lot of opportunity for you guys out there. And I really appreciated it. Chris, thank you so much. Does anybody have any other questions? No? All right, well, go eat your lunch, everybody. Chris, you and Tuesday, I owe you lunch, man. I definitely do.
I appreciate you guys.
Will you do me a favor and block your calendar for our next event at Weather Souls? That way all the people that can come to that, they can meet you in person and ask you any questions that they're too afraid to ask online.
Absolutely.
It's going to be Wednesday again, the first Wednesday of the month, whatever it was. I can't remember. Somebody sent it to me and I don't remember what it is now, but it's in my calendar. And it's going to be back at Weathered Souls this time again. It'll be Wednesday the 5th. No.
Yes.
Does anybody have that in front of them? Is it Wednesday the 5th?
Yes.
Okay, thank you, Susie.
You're welcome.
It is Wednesday the 5th, Passover. It will be Passover for our Jewish friends.
What time?
What did we start at last time, Susie? 4?
It's going to be, I believe it's at 3:30 to 6.
Yeah, 3:36.
Yeah, 3:30 to 6.
Okay, I'll be there.
I can send you did you provide your email address, Chris?
Yes, it's actually in the chat as well.
Okay,
And I
I can go ahead and forward you the invitation. That way you have it, the flyer.
I appreciate that.
Yes, sir.
Excellent, guys. Come meet Chris in person. He's going to be giving away free candy. No,
There you go. I appreciate
all that. He'll buy you a beer. I don't know. I'll make up a bunch of lies for you.
There you go.
All right, guys. Thank you so much. Have a great day. And thank you, Chris. I really do appreciate it. You're going to be hearing from me a lot. Thank you, sir.
Appreciate it. Thank you.
Hey guys, thank you, Chris.
Bye-bye.
Thanks, Chris.
Thank you.
Well, the good news is I get to edit these things at the end so I don't have to look so dumb. It'll make me look smart.